Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. He's speaking to us from southern Florida. Rick, welcome back to the show.
Thanks for inviting me on, Jim.
Tariff wars now ripping across the planet. Can there be a happy ending?
It's hard to imagine. You know, a couple months ago, I was telling my own subscribers, hey, don't worry, the Trumpster's got everything under control. He's just playing poker. But you could be wondering about that at this point. You know, we just announced another $200 billion worth of tariffs. The Chinese have retaliated in kind, and you know, it looks like we're just getting in deeper.
Can there be a happy ending to this kind of trade war?
Well, there could, and if you wanted to bet on it, I would say get yourself long in copper in one way or another. You know, we've had such a huge, nasty sell-off in the commodities, copper leading the way, that if there should be just a little bit of a turn in a positive direction, copper's going to scream. At this point, I'd say I'm not entirely optimistic that's going to happen, but you know, we may just back away from the brink.
Now, I know the president has said that he wants to start working on America infrastructure, but you can't build anything of significance without steel, and he's slapped all these steel tariffs on, including probably the biggest steel supplier to the U.S., Canada. And 70% of the aluminum in the U.S. is made in Canada as well. Why do you think he put tariffs on Canada? Just to put some pressure on for the NAFTA talks?
Yeah, I really did think that he thought at that time that Canada would say, well, this is just a bluff, and they'd somehow reconcile. And I say that because Trump, just prior to the increase in tariffs, it was actually, I think, something that didn't extend the tariff exemption. That's how it actually wound up taking effect. But Trump had just cut deals with, South Korea for one, and I think New Zealand and maybe Argentina. And I thought, well, if they can wheel and deal, then Canada will come on board as well. And so far it hasn't happened, so that is a concern.
Now, he cited national security concerns. Do you think the U.S. really has to worry about Canada not supplying steel and aluminum if there's a shooting war somewhere?
Well, you know, that's just sort of procedural shucking and jiving, this idea about national security. And I think I saw a story yesterday that Congress was trying to revise the statute so that they had a little bit more say in what constitutes a threat to national security.
Plus, I mean, right now we have Canadian and U.S. troops fighting side by side in Afghanistan. If we're a security concern, do you think they would allow that? Yeah,
you would think that, but again, you know, when you get involved, you have an executive who uses executive prerogatives to kind of change the meaning of legislation or to act as he pleases and find some justification in the law, then that's what can happen. U.S. and Canada can be great friends, and we can be allies in some of the battles around this world, but it doesn't necessarily preclude tampering with some of the statutory things that make us friends in an economic sense.
I've already seen news stories from Washington State where metal workers are being laid off because their bosses can't afford to buy the steel because of the tariffs.
Yeah, it's hard to see exactly where these tariffs lead. You know, everything's kind of interconnected, and occasionally something surfaces where it's pretty obvious what the problem is. In this case, you know, the Harley Davidson's move to offshore production was, you know, it just kind of drove home what's going on. But, you know, the new $200 billion tariffs include a lot of retail goods. And, you know, I'm looking at Amazon in particular. The stock is going crazy. And I don't think the crazies who are buying it have really thought it through. You know, with Amazon, so much of what they sell is retail goods with some or all Chinese sourcing, and it has to affect the company. But you know, the stock's up $27 today or something like that, and you know, you wonder what these guys are thinking.
Also, I've heard that Trump's message to American soybean and corn farmers who've been tariffed by China, just hang in there. Is that going to pay their bills?
He was talking about subsidies, and when you kind of run through the circuitous logic of that, like we impose a tariff and then we have to subsidize soybean producers to ameliorate the effects, then you could see the whole, that maybe Trump just doesn't get it. I mean, it seems so ridiculous to return to subsidies just because you've put up a trade barrier. It's definitely the wrong way to go, and it's obvious in the headlines.
Well, if you do that, could you be subject to rulings from the World Trade Organization, which I also hear the president may want to pull out of?
Yeah, Trump's pulled out of pretty much everything, you know. And I saw one of the TV shows, they had Jonah Goldberg on as a regular interviewee, and he was sort of disparaging the fact that Trump has pulled out of everything. I'm kind of in the middle there, you know. I think that most of these organizations really do nothing, and they function as they do about as much good for this world as the United Nations, and no great harm in pulling out. But the counter argument is that, you know, as long as we're engaged, we can at least have a dialogue and hope for some, you know, constructive purpose.
Didn't the U.S. pull out of the UN Human Rights Council?
Yeah, and that was long overdue. You know, a lot of presidents have talked about doing that, and we've pulled out. I think we did pull out for a while under under George Bush, but you know, it's as a matter of principle, I think that was a good thing to just say, hey, this makes a sham of human rights, and we're not going to be a part of it. And we're surely not going to finance it.
We'll have more with Rick Ackerman right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're chatting with Rick Ackerman. Rick, you'd think in troubled times that the price of gold would be going up, but it's not. What do you think's behind the non-movement of gold?
Well, you've got the movement of money so well dedicated at this point. Everybody knows who butters their bread. So we've got all the money managers just throwing OPM, other people's money, at a relative handful of stocks led by Amazon. So why change your game plan, you know? So at the institutional level, there's almost zero interest in gold. And, you know, there's so many gold mining companies, the juniors and some of the bigger companies that are going begging at this point. They're selling for under book value, and you know there's good value there somewhere, but it's just not now. You know, I've got a subscriber base that's really pretty engaged in bullion, but I'm always trying to steer down the middle course. You know, if there's something encouraging in the chart, I'll try to say it, or I will say it, but I don't want to raise false hopes. So the other day, we took a little bit of a shot with COMEX August Gold. There was what looked like a perfect buying pattern, and it got crushed. And usually when I see perfection on a chart, something that says buy, 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 and it doesn't pan out, I want to be quickly reversing the position and getting short. So I see gold with a bit more downside here, currently trading around 1248 basis COMEX August, and I think it's going to come down at least 1230 before I would even test the water. But as far as gold responding to international crisis or geopolitical news, it hasn't done that, I don't think, since Russian tanks rolled into Czechoslovakia. You know, gold seems to be oblivious to the real world, and you would need a real crisis, I mean a very severe crisis, to have some reaction in gold.
Well, we have all these debt bubbles all around the world, and if there is a recession caused by tariff wars, could you see people first off sell their gold to pay off all their margins and then reacquire it to protect themselves?
Well, again, that protection part of it's only going to happen if there's some real crisis. You know, we see the word crisis in the headlines so much that we've become kind of inured to what real crisis is. So I think at that point where people go for the gold to protect themselves, we're going to be in deep doo-doo. But otherwise, you know, if we're talking about just an ordinary recession that may shade into a depression, I don't see much of an upside for gold. I do think it'll hold its purchasing power, as it has through good times and bad, and I think that it may wind up being a good, I think it'll do as well as any other class of investable assets if we go into a recession or something worse. But otherwise, as hard as it is to imagine, some of these gold stocks, the mining stocks, have been crushed. We're actually going to see them go lower, and a lot of them will go out of business.
We'll have more with Rick Ackerman right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, what's your outlook on crude?
It's pretty amazing. You know, I've raised the point in my newsletter about where are we going to be if crude kind of settles in above $80 a barrel. And it's come off a little bit, really, with the shades of global recession that we have in a possible trade war. But, you know, it's getting to the point where we're not talking about the abstraction of relative abstraction of price per barrel. It's really price at the pump. So the U.S. is up substantially. You know, I think the national average on gas prices a year ago was about $2.26. We're close to $3 now. And that's going to mean something. It's just one more headwind that the bull market is facing. And concerning which, I do think we're in a very very blatant, brazen distribution that any rally in the broad averages is being used to distribute stocks. And I'm always wary about going off my charts, just sort of trying to think it through, because I'm wrong so much of the time. But in this case, the accretion of negatives that the market is facing, a strong dollar which impacts multinational earnings. You've got essentially shrinkage of dollars because of this Fed tapering program. You've got increasing interest rates almost to the point where the yield curve is going to be inverted. Housing market has peaked. Earnings probably can't get much better than what has already been reported. We're probably at the peak U.S. corporate earnings, and there's so many negatives here that could actually together, all of a sudden we'd be looking at recession. That it's hard for me to believe that stocks are going anywhere, at least going higher. So I think we're in a distribution now, and the only thing that's going to change my mind, if I'm benchmarking the Dow in particular, it's currently trading, let's call it 25,000. It's just a little bit below that now, but I need to see it push above 25,800. That's where a major peak was made back in February. To think that all of the sideways movement that we've had since February of this year resolves itself to the upside.
We've had record stock buybacks using the money refunded or money not spent on taxes because of Trump's tax reform. Has that been kind of a private enterprise quantitative easing?
Well, it has certainly been supportive of the market to the extent that these buybacks have, you're talking about more than $1 trillion worth of buybacks, quite a bit more than $1 trillion. And, that has put a cushion, it's really helped to keep stocks buoyant. It's a very pernicious form of inflation because, a company can buy back all of its shares and push its earnings multiples to the sky, but it's not creating any economic growth at all. So in theory, if all these companies are out there using their reserve cash or even borrowing it, if you can believe that, to buy back their own stock, then it's not really doing anything for the economy, and yet the stock market goes higher and higher and higher. But I think that effect is diminished, just as we're sort of talking now in the way of implicitly saying the market is very overvalued here, then you've got these buybacks occurring at really high valuations, and for that reason they've probably lost a lot of their impact on stock prices. So the companies are still, they're still buying back their own shares for all of the skewed incentives, the reasons that they have to do that. It increases corporate bonuses and everything else. So it seems to be win, 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 win. But we shouldn't lose light of the fact that these companies are really, they're paying very rich valuations for their own shares.
Do people often confuse the health of the stock market with the health of the economy?
For sure. I think that there's so many things wrong with the economy, fundamentally, that what we have with the stock market trading within, let's say, a few weeks of all-time highs is an illusion. People tend to ignore the problems in the economy, even if you're not a market watcher. Somewhere in the back of your head, there's this idea, well, how bad can things be if the stock market's going crazy, which it is. So it's really stock market winds up being a real distraction, and I think that's definitely what's going on now.
Although I think maybe one of the reasons why we confuse it with the economy is that if the stock market crashes, people lose jobs. There's no doubt about that, right?
Yeah, absolutely. And you'll see not only lose jobs, but we're going to have, I think San Francisco is setting up for an enormous crash because the prosperity that has pushed housing prices beyond belief. And I lived there for 22 years, but I couldn't afford to go back there right now and buy a house. So it's really insane. And you go down in a Mission, on what used to be a pretty humble street in a Mission, Valencia, and you'll find a $65 hamburger with some truffle in it, So things have really gone wacky in San Francisco, but it's all tied to share valuations for some of the the Silicon Valley companies that are insane. So I think San Francisco in particular is really vulnerable, and we've got so much capital concentrated in a relative handful of stocks that it's really dangerous.
Rick, anything else you wanted to add to today's show?
I think we've covered a lot of ground, Jim, and these were great questions. They're all things that I've been thinking about, but I guess bottom line, I'm very wary here that any strength in the market on a given day, like today, is really just distribution. That the boys, the institutional controllers of the stock market, are very deftly distributing stock before they pull the plug.
Rick, thank you so much for chatting with us.
Thank you, Jim. Always a pleasure.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. He was speaking to us from Southern Florida. I'm Jim Goddard. Don't forget, you can catch us on Twitter at House Street. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@housestreet.com.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.